Good evening, guys. It's Saturday, April 6th. My name is Dave Coker, and this is Talking About Finance. And hello. Let's talk about two different people. Both are wise, both are investors, both invest regularly, but they differ in strategies. One buys only index funds. One buys only dividend-paying stocks, perhaps ETFs, perhaps single stocks. It doesn't really matter from the point of view that this investor is getting paid regularly, and he's reinvesting all this cash flow along with his regular capital that he invests, like the index investor. Now, like death and taxes, retirement happens to us all. Sometimes we choose retirement. Other times retirement chooses us. It doesn't matter. When you're no longer working, the question is, can you still invest? The index fund investor can. He invests earned income. And he ain't got no more earned income. Maybe he's got a state pension. Maybe he's got a private retirement plan, an IRA, a 401k. It doesn't matter. The question is, will he feel comfortable investing? It's not clear. It's a very difficult exercise for him. However, the other investor who only bought dividend-paying stocks might have a state pension or a retirement plan or a 401k or an IRA as well. But also, this investor is used to reinvesting dividends. This investor is used to getting paid by his assets, his portfolio, regularly. This investor is more likely to continue investing. He has more immediate income. He doesn't have to plan and time the sale of assets to fund current term spending, let alone to free up some capital to reinvest. Dividend investing, it's just better. So now let's talk about finance. The S&P 500 finished down 0.95% on the week. While 6 sectors outperformed the index, only 2, energy and real estate, communication services, posted gains. The remaining 4 booked smaller losses than the S&P 500 did. 5 sectors underperformed the S&P 500, with healthcare dropping a massive 3.05%. The VIX traded up on the week to 16.03, started the week at 12.78. Big move up in the VIX. The 10-year note closed the week at 4.40%, up 0.2%, 20 basis points on the week, and up 50 basis points, 0.5% year to date. We're starting to see risk-free yields climbing across the yield curve. And one-year money is priced at 5.05%. That's not a terribly good endorsement for the supposedly healthy U.S. economy. Oil closed the week up 4.3% and up about 21% year to date. It finished at 86.71. Okay, you guys. 3 weeks ago, I changed my Bitcoin purchasing strategy slightly. I changed my day from Fridays to Thursdays. I wanted to avoid any possible weirdness at the next halving. But otherwise, I'm still buying the same amount of money, at least. I'm putting the same amount of money in the market every week. The same amount of the money I've been buying Bitcoin with for almost 10 years now. And the halving approaches. April 20th is the forecasted date, so in 2 weeks' time from the date of this video, we'll undergo the halving. We're going to drop from 900 Bitcoin mined a day to 450 Bitcoin mined a day. With the demand from the exchange-traded funds, as well as the demand of people like myself who just buy no matter what, it's difficult to think that we won't see prices moving up. Although this is a very odd cycle. So let's let it play out and see what happens. But keep the faith. When we look at Bitcoin spot, going back, and I'm preparing an article on this, no two halvings are the same. But we do know the price tends to go up over the long term. Just keep buying regularly. I am, and I don't care about the price either. I'm never going to stop. So let's see what me and my buddies, some 50 or so finance professionals from all around the planet, talked about last week. And surely you must know we're Global Wall Street. And between Telegram and our personal networks on LinkedIn and WhatsApp, we know everyone, absolutely everyone in global finance. This week we're reporting from Wall Street. This week we're reporting from Paris. This week we're reporting from Edinburgh again. This week we're reporting from Hong Kong. And this week we're reporting from Shanghai. We have people everywhere, absolutely everywhere that matters. So let's go. 7 slides for 7 days. And guys, it's going to be a wonderful week. We're all going to make some money. So we see here, when we start to look at different people, we start to see different people with different perspectives. These individuals seem to have a lot of shouty power. They're pretty loud. They make a lot of noise. They do have some influence at this point. It's difficult to respect people like this. As this guy said here, he's supporting electric vehicles, and along with that goes, I don't like the word third world, I should say. So massive strip mines in developing nations for electric vehicle batteries. We know that they're decimated, they're heavily polluted to fuel the West's taste for batteries to power electric devices, or electric cars, I should say. And also we know of individuals like this, and I've gone to my share of demonstrations, just sort of wandered around. They've all got the earbuds in their ear. They've all got the Apple iPhones. They've all got the displays of wealth. These are highly privileged people. These are people from the lower upper class, all the way up through the upper class and even lower. Really, seriously, it's pretty extreme wealth distributions being seen here. And it's skewed towards the top end. It's not the people who really have to put up with these policies, the people who are seeing massive inflation right now, primarily because of the policies that they're espousing. So it's really odd, and I do think their day is done because rationality is starting to grip hold once again, and people are starting to realize you can't do this. Everybody can't run an electric car. It just can't happen. There's just not enough energy in the United States to fuel them all, first of all, and second of all, the infrastructure will not support it. So it'll be interesting to see how this all plays out. And still, we know that every moment makes it. And here's an interesting one about names. Guys, moms know about this stuff. You just got to accept the wisdom of your mother. She always knows, right? And yeah, the world needs more oil. There's no doubt about it. There's just not enough renewables presently in the system, and they're just not going to be good enough. They just aren't. Here's an interesting one. I've read a couple books recently about the impact of these policies on the planet, and they documented about this huge wind farm, solar panel, I should say, this whole solar panel farm in the States, absolutely enormous, that was wiped out in a freak hailstorm. And guess what? They can't repair those things. They have to replace them. But guess what? Before they can replace them, they've got to remove the physical infrastructure because they need to get at the dirt. Why are you thinking they just can't scoop it up? Well, it's heavy metal, and this stuff leaches into the earth. So they've actually got to, where this solar farm was, they've got to remove as much as 1 foot of topsoil because it's contaminated with these metals. It's a very, very dirty way to raise energy, or way to generate energy compared to technologies such as oil, things like that. And we've recently seen a spike in the price of oil. Yeah, there's a lot of geopolitical tension and it's happening. And now we start to see that the technicians are looking at fundamentals in the markets, and we're looking at levels where there's options on futures specifically, and even futures contracts. And yeah, a lot of the TA people are saying we're going to see prices continue to rise. It's entirely possible. And the thing to keep in mind, guys, is when we talk about rising energy prices, rising oil prices in particular. Now, the U.S. is blessed, and people are always startled when I point out that the U.S. is the single largest exporter of oil today. It just is. It also produces most of the world's natural gas. Now, a lot of these surges in oil prices are hidden from the general public in the United States, because you'll notice from this chart year to date, we're seeing oil, and looking at 2 different time series, West Texas Intermediate Crude, WTIC, and I'm also looking at Brent, North Sea oil. And WTIC up over 21%, Brent up almost 18%, while natural gas dropped some 29%. Now, this is going to be very distorting for inflation. Inflation itself, as they measure it, is an average. It's going to come in lower than what inflation for fuel, specifically petrol, as the British call gas, as inflation for gas will come in. Long story short, entirely possible we're going to see $4 a gallon gasoline in the States. Some analysts who I follow putting extreme predictions in place, worst case I should call it, not extreme, $5, maybe $6 by the year's out. Yeah, it's entirely possible. We've got a lot of geopolitical tension right now, guys, and that's driving up the price of oil, even as lots of weird stuff's happening in different parts of the world that might impact energy supplies globally. Not the United States, however. Look at that. Natural gas prices falling, an abundance of natural gas. Oil, yeah, it's because of global issues that are taking place, global problems. But still, somebody messaged me and why I'm so pessimistic. I'm not really pessimistic. I'm an optimist in general. Overall, I'm optimistic. I am, however, a realist. And I refuse to just drink the Kool-Aid and blah, 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 the party line. No, index securities are not what you should be investing in, index funds. They're garbage, bullshit, right? Same thing with people who overlooked Bitcoin for so long. They were closed-minded. And I'm very optimistic. I like to make money, but I also like to keep a rational head, a rational perspective. We have to get control of these problems. We urgently need to get control of America's deficit and spending. Somebody I'm speaking with on social media claims we've been hearing these warnings about the deficit for decades and nothing's happened. Sir, look at the purchasing power of the dollar. Rampant inflation over the past 20 years has destroyed the purchasing power of the dollar. Rampant inflation over the past 100 odd years since the Fed was founded in 1913. The purchasing power of the dollar it's lost 97%. This is thanks to deficit spending and budget deficits and just printing money. We also need to get control of the energy policy. Some of these ideas are lunacy about running the whole nation off of renewables. As much as possible, I'm for it. It's got to be in a way that will not pollute the environment further. It just has to. So I'm not really pessimistic. I am optimistic. And yeah, the future is very, very bright because of many reasons, one of which is Bitcoin. Guys, don't be like this woman. Don't be kicking yourself in the butt when you're not buying now, when Bitcoin's trading below $70,000, right? Do not do that. I've been buying, as you know, for almost 10 years. I've seen lots of people put it off. They want to see a dip. I've got one guy right now who's refusing to buy because he doesn't fully understand taxes. When he sells, he doesn't even own any. Not like other guys I know that are easing in. Doesn't even own any. And before he owns it, he's just worried about taxes to death. Don't do that. I don't know how they're going to tax it. I don't care. I really don't care. You create the problem, then you solve the problem. I've got a lot of Bitcoin. I don't have much money in Bitcoin, but I've got a lot of wealth in Bitcoin. As far as I'm concerned, I haven't created the problem yet. I'm going to continue buying for a long time, I hope, as long as the good Lord's willing. We'll see. So yeah, just buy Bitcoin, guys, and you'll be in good shape. And here's another one from PlanB recently. Now, he's got some people, some wannabes, making a lot of noise and challenging him to do quant duels and bullshit like that. They're pathetic. They've got like 17,000 and 20,000 followers. It's garbage. It's real. I wouldn't blame him if he blocked him. I don't think he has, though. He's a stand-up guy. And here's a chart that he put out just a few days ago. You can find it on Twitter, PlanB, @PlanB. And he's got the 200-week moving average, clocks in at 33,000. Yeah, as he said in the tweet when he published this, he doubts it'll ever fall that far in the future. Yeah, I don't really look at the 200-week. I look at the 50-day and the 200-day. Yeah, we're trading above both. Clearly, the most recent drops have caused the 50-day to move up and the spot price not to accelerate as much as it has been in the past, but we're still very comfortably above. we're not in any danger. So yeah, the halving approaches. Prepare yourself. Get ready. It's going to change things. I'm wondering exactly how this cycle will differ from priors with respect to the halving. I'm not super worried. Even if Bitcoin doesn't spike and double like many people are claiming, I don't do level estimates, by the way. I just know it'll be higher in the future. When I don't estimate the date either, it's going to be a long period of time. My holding period is forever, as yours should be when it comes to pretty much any asset, Bitcoin especially. That's it for this week, guys. You're going to have an awesome week. Remember, the future is bright. The future is very, very bright. Take care, guys.